All right, here's a good question. What do we do with the utility stocks in this environment? Here's a group that got banged around over the summer when everyone expected the Federal Reserve to raise interest rates, something that would make high-yielding utility stocks seem less attractive versus bond market competition. Then last month, we learned the Fed's on hold. Since then, the utilities have come roaring back. However, given the fickle nature of this market, I got to wonder if the utilities can even sustain the move. Take American Electric Power, AEP, a company that owns the largest power transmission network in the country, along with a huge power generation portfolio. Serves roughly 5 million customers, 11 states. Here's a stock that's been on a roller coaster ride over the last few months. Let's finally turn its way back to where it was trading before the big sell-off in August, September, and it's got it at 3.6% yield. Now, AEP reported this morning, and even though the company beat Wall Street's top line and bottom line estimates, 5-cent earnings beat off a $1.01 basis, even though management boosted the full-year guidance, markets seem to almost ignore the good news. I think that's because investors find it hard to get excited about a slow and steady utility when they're hearing about the global economy that could get much better. That makes all those cyclical stocks that we talk about seem more attractive. That said, given the ephemeral nature of most of these moves, I would not be surprised if investors circle back to the nice and safe utility stocks in the not-too-distant future. And when they do, they're going to go to AEP. So don't take it from me. Let's check him in. Dick Akins. He's the chairman and CEO of American Electric Power. Hear more about the quarter and his company's prospects. Mr. Akins, welcome back to Mad Money.
Good to be with you, Jim.
All right, Dick, I'm seeing some really good growth in almost in all your states, including, by the way, Texas, where you've got these shale regions that I would have expected would have been cutting back. What's going on?
Yeah, so we're seeing electric load pick up because of shale gas activity. Those counties are still growing at 10%, and it's because the electric load continues to grow with not only drilling activity that slowed down, but still they're trying to get more recovery associated with it, and also compressor load being able to optimize the fields. So it's working out great for us.
One of the things I talked about when I was speaking with management for Dow Chemical today is they are talking about something like 400 new plants going up that would basically be in your region. Are you thinking these are going to happen?
I think clearly we have to have an energy renaissance that actually, if there's exports and those kinds of things that drive that kind of economy, we'll continue to see petroleum and other types of activities pick up as well. From a chemical manufacturing standpoint, those are continue to do well. We're still seeing siting of new facilities. So really, if we wind up with continue with a low cost and be able to export, for example, then we'll see an energy renaissance and a manufacturing renaissance to boot.
What's driving the strength in the state of Ohio, which looks pretty good?
Yeah, Ohio is really at a juncture where the economy continues to grow, particularly in our territory. Central Ohio, the Columbus area, job creation has been very positive. Matter of fact, our eastern footprint, which is the Columbus area and the adjacent states, have grown actually more than the western properties in the south central part of the U.S. So for the first time in a long time, and that's really driven by the jobs in the new economy with not only chemical manufacturing but also more leisure, auto manufacturing. Those types of expansions continue to occur.
Yeah, you are where people are not worried about job growth because it's happening. Now, you took out nearly 6,600 megawatts of coal-fired generating capacity between this year and also next year because of environmental regulations. Let me ask you, were those plants ready to be retired, or is that just actually because Washington says they must be retired?
Well, it's actually because we had to retire them. When you look at the analysis of whether you invest another $1 billion in a scrubber, for example, which takes out sulfur dioxides, we had to make that measurement of, okay, what natural gas prices look like, and if you're being required to take the units offline, you can't make those investments. So you retire that generation. It's an opportunity for us because we can also continue to build other facilities and obviously drive that kind of investment. So if it's done properly, rationally, and you make the transition that makes sense, then you're able to reinvest and focus on new resources of the future.
Now, last night I was listening to a conference called Kinder Morgan, Rich Kinder. The stock took a real hit today, but they're saying that companies like you need more natural gas pipe to get to where you're going to be building natural gas plants. Is the infrastructure there, or does it really have to be built out?
No, I think the infrastructure does need to get built out. And in fact, as we make a transition from coal-fired facilities that are being retired, the fuel of choice will be natural gas and renewables in place like wind and solar and those types of things. So natural gas, if you drive that and depend upon it, particularly in the summer, the heat of the summer, or the cold of the winter, then you've got to make sure those resources are there, and natural gas infrastructure, particularly pipeline infrastructure, needs to be present.
All right, now there's just the move against fossil fuels is happening with electric speed. We got a new prime minister in Canada, definitely against fossil fuels. Obviously, Hillary Clinton, a front runner, so against fossil fuels, not even getting Republican pushback. But could you please explain to the American people that you cannot use solar and wind as a baseline fuel in this country?
Yeah, so both of these supplies are intermittent supplies. In other words, when the sun's out, you get power and energy. When it's dark, you don't. When the wind is blowing, you get energy. When it's not blowing, you don't. And that's the kind of thing that you have to have 24/7 baseload fossil fuel capacity to back it up. And so, the customer decides when they want to turn their light switch on at any part of the day, run their washers, dryers, and so forth. And you've got to make sure that you're able to satisfy the demand and also be able to satisfy those areas where you need motor load, like air conditioning and that kind of thing. Solar and wind won't supply that.
Yeah, well, you keep telling people that because I think people are, you may love wind and solar like I do, but we're still going to need baseload fuels in order to be sure that the lights go on. Nick Akins, Chairman, President, CEO of American Electric Power, congratulations. Another great quarter. Good to see you, sir.
Thank you.
All right, I've been sticking by AAP and also Dominion. Those are the two utilities that I like. Why? Consistency, boost dividend, good balance sheet, lots of business. AEP is good. I know right now the market likes more exciting things. I like to get consistent yield. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.